Welcome back. All right, so cues across Asia are all right. There's a mild gain coming through, so we're standing by for, there we go, Hong Kong market's looking better. Implied open will come up on your screen, and there are, of course, lots of earnings to go through as well. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, let's start with the Coal India first.
Well, Coal India's numbers actually look good. There was a beat if you look at the revenue, the EBITDA, as well as the profit number. The reason that the revenue beat estimates is because the blended realizations actually were better. The e-auction contribution as well was better, and that obviously helps the profitability. And the other point was that the reason that there was a beat on the operational front was because the employee costs came down by close to around 10% on a high base. So that's what helped them in terms of the margin performance. The PAT, you'll say, how come there's such a big beat out there? Well, the reason was there was higher other income. It came in much higher, jumped up by close to around 70%, a couple of one-offs in the PAT number, in the other income number, which explains why the PAT looks quite good. But we look at Coal India with the breakup, right? So the FSA numbers out there, what looked good there was the realizations. It perked up by close to 100% on a year-on-year basis. That was encouraging, a little bit better than what the street was working with. On the e-auction front, the volumes continue to remain more or less flattish to the mild negative bias. But what was good out there is the realizations did jump up by close to 2.2%, which was a pleasant surprise. Also, in terms of a contribution in the last quarter, that's quarter 3, you had around 9.9% coming in from e-auction. This time around, it was 10.8%. Besides the good operational performance, they have given it a sweetener. They declared a dividend of around 5 rupees. That takes the total yearly dividend payout to around 26 rupees. And the receivables have come down, cash in the books as well, at around 16% of market cap, going with green on Coal India. But Mangalam's here to tell us about Dabur. Not too good, Mangalam?
Dabur, Nigel, it was a weak quarter that was expected. The company had given its fourth quarter update, and the weak quarter is what the company has reported as well, albeit a little weaker than what was reported earlier as well. Flat revenue growth, the EBITDA has actually declined a little more than anticipated. The net profit down by about 8.5% as well. So the street was working with a revenue of close to 2840 crores. The company's met that around 2830 crores, but the EBITDA expectations of 429 crores, they reported 427 crores, and a net profit expectation of 329 crores, they reported 313 crores. Domestic volumes have declined by 3%, and this against expectations of 4 to 5% decline itself. But more importantly, while the stock opens in the red, I'll watch out for whether it recovers or not, largely because of the new strategy that the company has announced of looking at double-digit compounding in revenue and profitability by investment in core brands, premiumization and contemporizing their portfolio, and bold bets across health and wellness spaces, which also include some of the M&A. So let's see how that pans out. The stock has been an underperformer. There has been derating. Can it turn around is something that the street will await.
All right, Mangalam, thank you very much for that. Let's talk about two other numbers, Voltas and Blue Star, which reported. Voltas, of course, came through with numbers yesterday. Upasana has got both. Upasana, morning.
Good morning. First up, let me start with Blue Star. Now, if I sum up the Q4 result, the revenue growth was in line, margin was below, but company's UCP segment, the growth moderated here, while EMP segment reported a strong performance. Now, coming to the numbers, revenue saw an uptick of 21%, which was largely in line, as mentioned earlier, and this growth was driven by company's 31% growth in its EMP segment and 15% growth in company's UCP segment. Now, UCP segment, the growth moderated at 15%, while the street was working with a growth of 21% on a YoY basis. EBITDA saw a downtick, was up 15%, stood at 279 crores, and EBITDA margin stood at 6.9%, which was down about 50 basis points, while we were working with a number of somewhere around 7.6, which was much below. Now, PAT stood in line largely at 194 crores, and overall, if we see, the company's order book stood at 6263 crore with an uptick of 9.9%. And coming to company's UCP segment, the UCP relatively lower, as company says that the April demand has been muted and it expects the demand to pick up in May and June 2025. Now, coming to Voltas, overall result was below expectations. Now, if we talk about the revenue was largely in line, up about 13%. EBITDA was up 74%, but below our poll estimates. EBITDA margin stood at 7%, while we were working with a poll of 7.5, so slightly lower. And PAT stood at 235 crore, while we were working with a poll of 247 crore, much lower. Now, company has lost its market share in Q4 and it stands at 19% as of March 2025 versus 20.5% in December. But company still retains its position in FY25 as #1 player in RAC. Now, Q4 UCP saw strong performance of revenue 18% and margins was a surprise with an uptick of 90 basis points at 10%. And company's Q4 EMP segment remains a drag with a revenue up 4% on a Y-on-Y basis. So overall, I'm going with the red, but I won't be surprised if it recovers and stands in green as the stock has recovered much in the last 1 month.
Okay. All right. Got that. Thanks very much, Upasna. Let's get back to Mangalam. United Breweries. At least here consumption is strong, Mangalam.
Cheers for beers. That's what we say. Why do I say that? Because, you know, the revenues are a lot better than expected. We have the EBITDA and net profit even better than street expectations out here. And there wasn't much going on in this quarter apart from, you know, the Telangana issue. So the street wasn't building in a lot of expectations. Revenues 2321 crores. The street was working with 2300 crores. EBITDA 186 crores. The street was working with a number of 173 crores. So on account of that, there is a 50 basis points beat on the margin as well. And the net profit at 97 crores, near 10% beat on street expectations of 90 crore as well. Domestic volumes, higher end of expected 4 to 5% range. And it has been led by premium beer. So 24% versus expected 24-25% growth in the premium beer range. And that's something that has been doing well for them. But if the fourth quarter was good, my sense is the first quarter will be even better. Why is that? Because of peak summer season. Telangana price hikes have been in the price. So obviously they will improve their operational performance there. There has been a reset in Maharashtra distribution that would help. The only offsetting factor would be the 10 rupees per bottle increase in Karnataka excise duty. Let's see whether the company can weather that or not.
All right, thanks a lot for that, Mangalam. Well, let's go back to Sudarshan. He's here to tell us about Tata Motors. Well, sir, yesterday you told us a couple of reasons why Tata Motors is higher. Today you've got more reasons. Maybe Trump and the UK do a deal. Tell us more.
Today there is something new. It seems like that before Trump went to sleep, he decided to tease his upcoming press conference on Truth Social. He has posted that in the upcoming conference that he is going to have, in that one he is going to announce a big trade deal with a friendly nation. Now, after that, New York Times has come out with a report that that nation might be United Kingdom. And as per the report of New York Times, what does that report say? It says that deal, if it happens, it could be significant for both countries, but it's not clear what all details are likely to be in the agreement. Also, it's not clear if they will sign the agreement or they will sign they will mention the framework for the agreement. So we'll have to wait for those details to come out. It's likely India time around 8:30 p.m. and EST it's 10 a.m. Now coming to why it's positive for Tata Motors. If you remember JLR, which forms nearly 1/3 of its North America forms 1/3 of total sales of JLRs, and JLR does not have any manufacturing facilities in the US. That was the reason when US had announced tariffs, it was taken very negatively. Now JLR forms 30% of Tata Motors consolidated revenue, and because of tariff, stock of Tata Motors had seen a sharp fall. It did recover in the last few days, but if this news comes out, it would be positive. Also, it will help JLR maintain its targeted EBIT margin.
Okay.
Stock was the big gainer yesterday, 5% in trade, and so we'll see if there is more to go. I mean, the stock is kind of still beaten down quite a bit. So, by the way, interesting insight there. Before Trump went to sleep. We don't know if he went to sleep, right?
Does he sleep?
Never know. Never know with Trump.
He's on record saying he needs little sleep. He's built different.
Oh, God.
So, I mean,
at his age, my God.
Well, Lupin is the next one we want to focus on. Ekta is here with the details. Ekta, over to you.
Thanks for that. Well, Lupin has launched Apitium generic in the US markets. It's basically a drug which is used for treatment of seizures. Why is it going to be in focus for Lupin? Because it's one of the first ANDA applicants for this particular drug and is eligible for 180 days shared exclusivity. I had a chat with a couple of analysts. They said that the opportunity is likely to be limited for Lupin. Around 4 to 6 FTF players for the drug already, which is first to file players, and hence Lupin could make around $10 to $15 million from the drug from this particular sale in the next couple of quarters after the launch.
Okay, all right. Thanks a lot for that, Ekta. Well, let's hop across to Vamakshi. She's tracking a couple of more counters. Vamakshi?
Well, good morning, Nigel. Let me first start off with KFIN. Sources are suggesting that the promoter group entity, General Atlantic PE, is likely to sell nearly 6% stake of in the company via block deals. Keep in mind that at the end of the March quarter, General Atlantic PE had a stake of somewhere around 32.9% in KFIN, and post this deal, the stake could fall down to as much as 27%. Keep in mind that sources also suggest that deal will be at a discount of almost 5 to 8% over yesterday's closing price. So therefore going with a red for this counter. Apart from that, keep an eye out on Niva Bupa, going with the green for this one. Net earned premium saw an uptick of almost 25%. The underwriting profit was down nearly 12%. The combined ratio too increased by 338 basis points, but it has come in much ahead of what Motilal Oswal was expecting. The operating profit is down 43%, but the net profit is up nearly 31%. We also have a note coming in from Motilal Oswal. They have a buy rating, target price of 100 rupees per share. They say that strong underwriting performance has boosted the company's PAT, and backed by a very strong performance in Q4, they've gone ahead and upgraded their gap estimates as well. So going with the green for Niva Bupa.
All right, thanks very much for that. UPL in focus with Ria. Ria, morning.
Well, yes, good morning. UPL is expected to be in focus today since China has imposed levies on the imports of an insecticide called cypermethrin from India following a year-long investigation. These duties have been made effective starting yesterday, the 7th of May, and will be levied for a period of 5 years. These anti-dumping duty rates will range from 48.4% to up to 166.2%. Now, China's Ministry of Commerce has said that they have found that India was dumping this compound into the Chinese economy and causing damage to Chinese companies, which is why this decision has been taken. Now, taking a look at the anti-dumping duty rates to be levied on each of these companies, for UPL, the rate will be 166.2%. We also have some other names like Meghmani Organics, Bharat Rasayan and Haranba Industries that will be taxed at a rate of 62%. Some unlisted players are also a part of this list, and the order has also talked about some other unspecified Indian companies that will be taxed at a rate of 166.2%. But as of now, UPL is taking the biggest hit, and we're expecting the stock to open in the red today.
Okay, well, that's the list of stocks that we are focused on. Well,